Good evening to each and everyone gathered here. For today's event, we have with us our CIO, Mr. Sunil Damania, where he'll discuss some interesting trend on India Inc. and the trajectory of the Indian equity market in the future. Drop your questions in the Q&A box below the video on any concerns you may have on stock or sector related, and Sunil would try answering all of them. Over to you, Mr. Sunil.
Yeah, thanks a lot again, and very warm welcome all of you. India Inc. June result has come to an end, and I think if you read some of the reports that has come out in the media suggesting that numbers are really bad, I don't agree with those assessment. Why I believe I'm saying so? And had that was been the case, market should not have gone up. If you look at the market has really done extremely well post result season started coming. So since July, market has done extremely well. So why would the market would do well if the numbers are not so great? So I don't, and I'll give you some reasons why I don't agree with those assessment that data doesn't this one. I think the India Inc. has done extremely well. See, we need to always look at data in terms of the situation under which they were. What all India Inc. has to go through from April to June quarter. The crude oil prices were surging $120 per barrel that we have seen in that quarter. The metals where prices are going up. Russia and Ukraine war was it at peak, and it continues to be there. There's a complete, and the inflation going up across the world. The central banks across the world has been hiking rate of interest, and it was a very difficult situation under which India Inc. has to perform. And once you consider what kind of challenges that someone had to go through and report the numbers, I think they've done a fantastic job in terms of performance. And I think and hence I read some of these media reports suggesting that India Inc. growth has slowed down. I beg to differ with them for the very simple reason, because you need to also understand how difficult the situation was. And what gives me another comfort level, I know, of course, I'm preempting and I'm right now giving you my prediction also. You look at the GST collection, 1.49 lakh crore. But what is very, very interesting, and I think you must have also read in the newspaper, that now government is looking at 1.7 lakh crore GST collection every month. Where do they get this kind of a comfort level? That clearly gives an idea that they are extremely gung-ho about what is happening at the ground reality. And if that is so, it should reflect in the India Inc. numbers, whether we like it or not. And there's one more data which has come out. If you remember, sometime back, Government of India came out with not sometime back, a few days back, Government of India came out with some data points from the Ministry of Finance, which says that overall direct tax collection, net of refunds, which include corporate tax and the personal income tax, grew by 40% in first 4 months to July. And they are also saying that corporate citizen tax will continue to rise going forward. So I think that clearly gives an idea that earnings growth, of course, there are some people who suggest that earnings will take beating. Of course, it will take some beating. I'm not disputing on that fact. But would it be a very doom and gloom scenario? The answer is no. And that's what gives me a comfort level. So let's start our webinar with a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for future returns. With this, before I start discussing, I think I have a very important announcement for all of you, is that you all are our equal stakeholders in the journey of Markets Mojo, and it is our duty to be transparent to you people and give you some sense of what we are planning to do going forward. Very soon, that is on coming Friday, you will get some idea about what we are going to do next. But I must give you that Markets Mojo is a two website, marketsmojo.com and mojoinfinity.com. The difference between Markets Mojo and Mojo Infinity would be that Markets Mojo would be do it yourself. Okay, while Mojo Infinity platform would be we do it for you kind of a stuff. So it's an advisory, stock advisory, Markets Mojo, assets advisory, Mojo Infinity. And if you know, the model portfolio and portfolio optimizer, which we have stopped promoting in our subscription offer for quite some time, is now moving under mojoinfinity.com. So Mojo Professional will have everything minus model portfolio and portfolio optimizer. So this is a distinction now you would see between Markets Mojo and Mojo Infinity. So and going forward, Markets Mojo will be completely subscription model, which is right now also, where the price would go to 23,999 for 2 years, but without including model portfolio and the portfolio optimizer. The Mojo Infinity will come, will have model portfolio, and you would be asked to pay 2% per annum fee to enjoy model portfolio. So right now in our Mojo Professional, if you remember, we used to allow 5 model portfolio going up to 1 crore each. So you can technically make 5 crore portfolio. So, and 5 crore, 2% of 5 crore, you can all imagine, it works out to near about 10 lakhs. Am I right? And that you can avail the last time in the history of Markets Mojo under Mojo Professional fees. And I'll come to that little later. But before that, I must clarify that if you are a Mojo Professional member, as long as your subscription remains, which includes model portfolio, you don't have to worry, because you will continue to enjoy model portfolio and portfolio optimizer as a part of your Mojo Professional service. But the challenge is that once it expires, then you will have to pay 2% to get that benefit of model portfolio and portfolio optimizer. So it's in your interest that if your subscription is coming to an end and if you wish to lock in the future benefits, now you should extend your subscription as many times as possible. And I'll tell you why also. Why? Because we have extended our Azadi offer of 19,999 for 2 years. That also comes with additional 6 months. So even though you pay only for 24 months, you enjoy the benefit for 30 months. That is 19,999 for 30 months. But there is another reason why you should be a Mojo Professional member, and I must tell you why. Because we are taking a next leap. What is that next leap? Next leap that we are taking is that we are planning broking, and under Infinity we are planning PMS, AMC and wealth management. And I must tell you that PMS is the first one to go, and we will see whether we should go with wealth management and AMC simultaneously or one taking precedent over others. We'll wait and watch. But broking license which will be available to our Mojo Professional members. Now the beauty is that this will come in next 12 months or so, subject to SEBI approval. But being a Mojo Professional benefit, the first time in the history of India, the broking would be in real sense zero. Why? You don't have to pay anything for the cash broking. You don't have to pay anything for the delivery, that is intraday also and cash both, and FNO. Today you do pay some kind of a fees on FNO also, am I right? But this free broking would be applicable as long as your Mojo Professional is available. Once that kavach of zero broking will go away the moment you lose your Mojo Professional kavach. So as long as you are Mojo professional member, you will enjoy this zero broking. Plus, as long as you are Mojo professional member, you don't have to pay 2% on the model portfolio. It's included as a part of your package. You don't incur anything. So if you are using model portfolio, if you're planning to use model portfolio, it makes a lot of sense to not to pay 2%. And I'm saying in your interest, otherwise it's happy for us to get 2%. Am I right? We will make more money. But it's in your interest that you understand the benefit of zero broking, and on an average, and retail investors end up paying near about 3,000 rupees as a broking. So that money you will save, and plus you will enjoy the model portfolio, which is a part of our package, which I've discussed about 19,999 for 30 months. Infinity will have model portfolio which would be charged at 2%. So suppose if your model portfolio is 10 lakhs, we would ask you to pay 20,000 rupees per annum for that. But if you're a Mojo professional member, you don't have to pay anything. Why? Because our Mojo professional membership includes that package. Now this slide I think is a very, very important slide for all of you to remember that. Why? We have underlined two lines. On both the bullet point, both the points underlined. After your paid membership expired, the moment your membership expires, you need to pay model portfolio 2%, and you lose 0% potential broking benefit. So it's in your interest you extend as many times possible your Mojo professional. So what is the offer that we have? We have an offer of 19,999 for 2 years, and that comes with additional 6 months extra. And this offer includes model portfolio as well as optimizer. As and when we launch broking, it would come to you at zero cost. So it's a very beautiful offer and see, this is last chance. As I told you, we are closing subscription-based model for model portfolio. In subscription, the model portfolio and portfolio optimizer will not be included. It will move to the Mojo Infinity platform, where you are supposed to pay 2% fee based on the amount of model portfolio. And the point I must also tell you that you will save a huge amount of money on the broking. So it makes a lot of sense for you to avail this. You can extend multiple times also. There is no restriction on this. And please note that this offer of 19,999 for 6 months is exclusively available only to the webinar attendees. It's not available on our site or other things. So please avail this offer immediately. Now let's come to the topic that we have on hand, the June numbers. And if you remember, we have a habit of prediction, am I right? So last time when we were doing March 2022 numbers, we did predict what you should expect for June 2022 quarters. And it's time to rewind that and see how far in terms of a prediction we have gone right and we have gone wrong. So we do this every year, every quarter, and you will get the benefit of that. So let me show. I said we had stated that higher crude oil price will hurt input cost, and that has actually happened. Many companies did complain about that, and not only that, they did mention that sometimes some of the raw material costs that even though the raw material prices have come down, since they already have an inventory in their books, it will also reflect to some extent even in the September numbers that I'll come to a little later. Another prediction is that inflation, despite high this interest rate, will keep going up, and by August the trend will start reversing. And we have seen the inflation remain high. RBI did hike the rate, and clear inflation moved up and started coming down in last couple of months. So I think the numbers, the trajectory started coming down. So we had predicted August, but I think the numbers started trending down significantly from. So the August numbers have not come. August CPI has not come, but what we have is July data, and it just gives a comfort level. It has started coming down. Rural demand did impact FMCG companies and consumer durable company. And one of the reasons why we see lower volume growth from FMCG companies and consumer durable companies because of lower offtake from the from the rural India. They've started doing down trading, or they, to some extent, started consuming less of the same product. And I think I would request all of you to listen to Marico con call, where they did mention about how their Saffola oil did get impacted because of the higher input cost and softer demand from the non-urban areas. We did also expect that due to slowdown in the global economy, the merchandise exports will take a beating. And if you happen to listen to some of the commentary, especially from the textile players, we did see some impact on the exports revenue. And if you look at the India's market share, not India's market share, the US exports, it has come down. So when you look at cotton sheets, which was has come down to 54% for the first half of 2022 versus 57% of last year. And terry towel, our market share has come down to 40% from 44%. So one is the demand slowdown, and second thing, other countries which compete with India did very well. So that really impacted the merchandise exports. Management commentary, we had predicted they will remain cautious, and it continued to remain cautious even as we speak because of global uncertainty. We also predicted that rupee will touch 80 by August 2022, and we did go below 80 rupees. And as I speak to you, today it's at 79 rupees 43. So that prediction also came true. We also suggested that capex cycle could take a backseat because of higher interest cost. So not much has been impact has been seen. That's why I put in an orange or a yellow as you can see in your screen. Some of the players did scale down their capex, like for example JSW Steel. They have reduced their capex. They announced the capex what they are going to spend. But is there a major impact overall? The answer is no, and that's why I have not put in a green color. One prediction which did not go right is that the lower metal prices and other commodity prices would start benefiting the company. Unfortunately, that has not happened. And why it has not happened? Because a lot of companies had an inventory which they have already bought it from the higher prices. And they are using those inventories, and which did not help them the lower commodity price. So that did not reflect. And if you happen to listen to the commentary which is given by the India Inc., some of the companies do give an indication that this will also not reflect even in the September quarter. Why? Because they do have an inventory which will get consumed by September quarter, and meaningful recovery would be seen only by December and the March quarter. So I think that's the one. Many startups have started laying off, and that trend continues even as I speak to you. And our sense was that it should have impacted consumer durable and the real estate demand. But if you happen to listen to some of the commentary given by real estate players, there will be no visible impact as such. So let's be very upfront that we did go wrong, but consumer durable company demand has gone little soft, and everyone has discussed about that. In the commentary also, so that's it's all there. Now let's look at what is our IP suggesting, or the June numbers. So this data doesn't look very rosy. Why? Because of micro cap companies. If you look at 40% only company looks very positive trend, CFT trend based on our IP, while 17.3 negative and 42.7. This is purely because of micro cap. Why am I saying so? To jot down 39.9% positive. But when I look at large cap, mid cap and small cap, Not a single market cap is less than 40%. In other words, micro cap did not perform as much they should have performed. So that's one of the reasons you see a decline from 39 to 9% from 41.1% of March 2022 quarter. This is purely because of micro cap. So let's look at large cap. 60% of the large cap companies have reported positive CFT versus 56.5%. So there is a growth. Am I right? Which is a good sign. Mid cap, it's come down a little bit from 55 to 58, but it's still above 50. Okay. And small cap is improved from 51.8 to 52.1. So while overall India Inc. looks little not so great, less than 40% positive, but small cap 52.1, 55 is mid cap, and large cap is 60. They all are above 50%, clearly giving that overall number looks extremely good. And when you summarize everything, where do we get? 36.4% growth in top line and 25.8% growth in the bottom line. Of course, I do understand the last June 2021 quarter was a little challenging quarter for the India Inc. Why? Because of the second wave. And so that there was a lower base. But despite that, I think the kind of global uncertainty that India Inc. has to face, they did a brilliant job. Now the question would come then, but quarter on quarter the numbers are very bad, at least on net profit front. Yes, because March quarter is always a very strong quarter for India Inc. Always, every year if you look at it. Because a lot of corporates would have targets, and to achieve that target, they will go a little extra. And June quarter is always the little soft quarter for the India Inc. And that's why sometimes quarter on quarter doesn't make sense for June quarter. But just for the understanding, I've given this data. But what does this give me a very great comfort? That despite March quarter is a very strong quarter, India Inc. for the June quarter reported 1.8% growth in terms of top line. So I give a lot of credit to the top line growth. Why? And I give a classical example. This is a case study which I did many years back. So Hindustan Unilever, and you can look at the data, you will get it. So for many years the top line did not grow, but the bottom line did grow. And I was always, and I've stated, I wrote a couple of articles also on that in my previous organization. It's not a very healthy sign. Why it's not a very healthy sign? Because you can manage your profitability by reducing cost, but there is a limit beyond which you will not be able to reduce your cost. Am I right? And hence, I get little discomfort when I see the company's top line is declining, but bottom line is increasing. Because I don't know how long they'll be able to sustain this trend. But I do get comfort level if the company's top line is growing. Of course, it's all relative sense. But if the top line is growing, then eventually it should reflect in the bottom line. So if you look at some of the growth companies, the investors are happy to pay that premium as long as the top line is growing, even though they're incurring losses. What did they give the comfort level? Is at least companies are either gaining the market share or at least maintaining the market share. And that's a happy scenario to be in. So I personally, so that's why I give a lot of credit to this 1.8% growth in the top line growth. And that's one of the reasons I believe that India did extremely well. And if you look at our IP also, whether it's a large, mid or small cap, everyone having more positive than the negative. That also gives credence to the data point I'm suggesting you in terms of the growth. Now the beauty is this, that is this growth is lopsided? The answer is no. If you look at the sector, 65 sector reported quarter on quarter growth, only 44 reported degrowth. And when I look at Y on Y, almost each and every sector reported top line growth. In terms of profit also, 80 sector reported Y on Y and 37 this one. So less quarterly wise, it looks like little bad, but the scenario is extremely good on the top line. So that really gives me, and which other sector did well? Pharmaceutical, finance, housing, these other sector did extremely well. And this is over March 2000. And some of the sectors did really challenging, refineries, engineering, computer software, which we all know did have a lot of problem. Still is a disaster for them. and so as the case of some of the auto ancillary and HCV, LCV company. And cement, I think one sector which continues to struggle very significantly. Let's go to the company level then. How many companies, and this data, I've taken only those companies which has a market cap minimum 100 crore. So more than 100 crore should be there. Because otherwise, you look at some data where some of the micro cap will come and then it will completely distort the picture the way we saw on overall CFT score. Am I right? So when you look at minimum 100 crore market cap company, 1026 companies reported growth in top line and quarter on quarter and 1645 in terms of Y on Y. And in terms of bottom line, 743, 102. So it does gives an indication that this growth that we, or whatever the number that we are saying, is not because of few sectors doing well or few companies doing very well. Am I right? Of course, there are some laggards and there are some gainers, but I think overall India did very well. But the top 15 companies in terms of net profit, as high as 5 companies, as high as 10 companies have reported degrowth over March 2022 numbers. And again, I repeat, is this a worry? My answer is no. Why? Because March quarter is normally the good quarter. And if you look at which are the companies which have reported degrowth, okay, company like Tata Steel, why? Because we all know what happened. Each and every private sector banks, I think they have reported quarter on quarter decline in their bottom line, whether it's an HDFC Bank, whether it's an ICICI Bank. If you look at the Axis Bank, they are all in top 10, and so is the case with State Bank of India, which is also reported quarter on quarter decline. But the company that did very well quarter on quarter, Reliance, purely because of OTC, plus their Geo and the retail firing, ONGC because of higher crude oil prices, Coal India because of higher coal prices, ITC, which has been an exception in that case, did extremely well, up by 4-5%, and Hindalco because of higher aluminum price. But that's not, the numbers are not going to get repeated, maybe most probably for the September quarter. Let's look at the Nifty 50 companies before we summarize what has happened overall. Some of the companies that did very well: Dr. Reddy, Apollo Hospital, Cipla, Titan, Coal India, Asian Paints. This is a Nifty 50 company. Tata Consumer did extremely well, 17.4%. But I do get a sense that Tata Consumer somewhere in terms of strategy, they are floundering. And I think Sunil D'Souza, the new MD, I think still grappling with which lever that he needs to use to create wealth and create the top line. So that's one. We did discuss about ONGC, Reliance. Bajaj Finance did very well, and so is the case with company like ITC. But at the same time, there are companies which perform very badly in Nifty 50. Tata Motors purely because of GLR and write-offs. BPCL because of government of India not allowing them to pass on the higher petrol and diesel price, crude oil prices in terms of this one, diesel and the petrol to the end customers. Sun Pharma, JSW Steel company had a very bad numbers. Sri Cement, cement sector, and so on and so forth. They did very well. And normally infra companies, you should not compare quarter on quarter like company like L&T, because normally infra companies normally have a very good quarter, March quarter, and hence the soft first quarter would always be soft. Divi's Lab continued to now creates now some question mark about the growth possibility. If you remember, Marcus Mojo was the first one to identify that Divi's Lab will grow at the slower pace. And we did close almost a year back Divi's Lab, and this company is underperformed very significantly. Some of us, basically some of the experts made us fool that these people don't understand how to look at the businesses. And we said we follow our IP, and our IP does suggest that this company will underperform. It did actually. And if you look at the numbers also, I think it started reflecting in terms of their top line and the bottom line. This is just for the understanding for all of you that how you should be looking at India Inc. numbers. So banks, finance and IT software they accounts almost 50% of the, not 50%, but almost 43-44% of the India Inc. Profit. And that clearly gives, if India Inc. has to do well, the bank, NBFCs and software has to do very well. Otherwise, the overall growth of India Inc. would be little challenging. This just to give a flavor so you understand. See, as an investor, you would have too many data points coming in, am I right? And you should be very, very careful of what is a meaningful information and what is a not so great meaningful information. And hence, if you really wish to understand which sector is going to be very critical for the India's growth story, this will give you an idea. See, some of the business like steel would be cyclical, crude oil and this would be also be cyclical, non-ferrous metal would be cyclical. But what is non-cyclical is IT, software, power, mining. That would really give it, pharma to some extent will give an idea what is the trajectory we should expect going forward for the India Inc. Because ultimately market is a slave to the earnings, am I right? And if there is no earnings growth, no market can sustain at the higher level. So this is just for more of an academic purpose for you to make a smarter investors to understand where does this India Inc. make money from. Now this one slide that we started adding from last couple of quarterly results, just to give you a flavor of what is happening, is interest cost rising is a cause of concern for India Inc. And of course, this is one data point that we all must be aware. So in case if you don't include this data, you should always remind us, okay? And what we realize is that India Inc. ability to serve interest costs has deteriorated. Why it has deteriorated? Now, interest as a percentage of EBITDA now accounts for 17.8%, which was only 14.9% for the quarter ended March. It was 16.1 for the December, and this should be September. Sorry, I made a mistake here. It should be September. It's not March 2021, but this is September. So oh God, yeah. So let me just make it correction so that I don't forget this. Otherwise, this is September. Okay, so this is what has happened in terms of this one, that India Inc. Numbers, the interest cost has gone up, but has it gone up too much to threaten the profitable India Inc.? Not really. And of course, we did see a rate of interest further going up. So will it deteriorate further? The most probably the answer is yes. But would it deteriorate too much that market would start getting concerns about it? The answer is no. So yes, we will look at this data point very religiously to understand what kind of impact rising interest cost is making on the, if it goes to 20% and above, then yes, it is a matter of little concern. Why? Because out of 1 rupee, 1 rupee 20 paisa is going to just to meet the interest cost, which is not a very happy scenario to be, am I right? So I think that's what we will be looking at. But is it threatening to destabilize the Indian Inc. earnings growth? The answer is no. Based on these numbers of India Inc., where do we stand? There is not much of a difference. Well, if you remember, when I made my presentation for March 2022 quarter, based on trailing 12 months, India Inc. PE was near about 23, and we continue to remain at 23x as on today. So there is no deterioration as such. Why? Because the June quarter 2022 has been much better as compared to June 2021 quarter. And that's really, and I do expect that September numbers of 2022 would be much higher than the September of 2021 numbers. And hence, I don't expect this PE to get deteriorated further if the market has to go up. So I don't expect that to happen. Let's very quickly go through what some of the leading companies have given their outlook. The inflation, Hindustan Unilever, inflation continues to remain a significant challenge for them. What they are saying is that the September quarter margins will also remain under pressure. Why? Because some of the cost that has few commodity prices that have, it's still there in the pipeline, in the inventory. and hence they will start consuming it, so it will not percolate down to in their bottom line. And I think and what HUL has given indication that the margin will start improving by December quarter. That's what Hindustan Unilever has to say. TCS has given that attrition will continue to remain a little higher till quarter 2, and then it will start subsiding going forwards. So I think don't expect too much attrition rate, some improvement on the relief on the attrition rate from the IT software companies even for the September quarter. L&T has retained the guidance of 12 to 13% order inflow. So despite the rate of interest going up, they don't believe that the order inflow will get impacted. But they do expect that global commodity price and resultant supply chain could result into headwinds. So I think one common theme that what I've gathered from all the commentary of leading India Inc., that global uncertainty seems to be another challenge for them, and they don't know how it's going to play out. Okay, so every player, company commentary has been a little cautious in that front. Okay, they were so in March quarter, and something similar they have maintained even for the June quarter. So let me put it this way. Havells, which is a FMCG company, and they did mention that, what 11 Hindustan Unilever said, reset cost potential to reflect in the next couple of quarters. So it's not going to happen immediately in the September quarter. If you look at Tata Steel, I think they continue to, of course, we all know that Government of India suddenly imposed export duty that really made life a little difficult. JSW reduced their capex, and Tata Steel said that rest of the year will continue to be challenging for Tata Steel. And I think that's one factor we all must remember. So don't expect too much great numbers from steel companies. Cement companies continue to be underperformer in terms of top line and the bottom line, and I think they will continue even for the September quarter. That's what Hero MotoCorp is little bullish, and I think what they are saying is that normal monsoon and the crop cycle should help them to have a better this one. And they are also hoping on the GST collection and PMI does give that consumer confidence coming back. And the big daddy of India Inc., Reliance Industries. I think Reliance Industries do believe that demand for the oil will remain strong, and they do expect that polyester and the polymer demand is likely to remain strong going forward. But of course, their outlook is a little clouded because of the global uncertainty. So what does this overall June 2022 quarter says? This is my summary of what I've said in last 40-45 minutes is this. India Inc. did extremely well. Why they did extremely well? Because there were a lot of uncertainty, global uncertainty, they did well this. Our IP continues to also suggest that India Inc. did very well because there are more companies which have reported positive CFT score. Banks also did well despite there is a quarter-on-quarter decline in the net profit. The NPA levels have improved. That's a very good. FMCG companies continue to face input cost pressure. They are unable to pass on the cost price, and I think the volume took a big beating, and I think they will continue even for the September quarter. And demand has started tapering off, whether we like it or not, especially for the consumer durable companies. So if you listen to each and every consumer durable company, they say that demand started tapering by mid of May. And I think they are all waiting for the monsoon to increase the demand for their products. So what you should expect from September quarter? ये तो बात हो गई June quarter की, because market always look forward. So what should you expect for the September quarter? So again, we are making a prediction, and when the result season get over in September, we will tell you how much our prediction came true. Many companies will see margin expansion now. Why? Because of softer commodity prices and crude oil prices. Will it reflect 100%? No. But we would see some pipeline for inventory getting consumed, and hence some benefits will start accruing to the margins of many leading India Inc. companies. Inflation should continue this downward trend, and RBI would do one more rate hike, and then they would pause. So that I think a lot of companies would now start re-looking at their capex cycle, because now they would get a clarity that now rate of interest has peaked. Demand outlook will continue to remain soft, especially for the rural economy. Why? Because the paddy sowing has been little low, and that could impact some of this one. So hence, FMCG companies, consumer durable companies will not come out with the very robust numbers in terms of their top line volume growth or their margin. Rupee should strengthen or should stabilize, and that could give some relief to some of the India Inc. who has been importing their raw materials. Monsoon is the key factor, and I think that will going to decide what kind of volume growth India Inc. can report for the festive season, which would start post-September numbers. So I think that's what one. Higher interest costs should impact real estate demand, and hence we do expect that real estate companies will come out with a very not so very great commentary. Cement companies will continue to report lower numbers. If you look at it, cement companies reported Y-on-Y decline and quarter-on-quarter decline in their bottom line, and I think this something similar trend will continue. Steel companies will also have a very not so great numbers going forward, but auto ancillary companies should do very well because of pent-up demand, availability of chips, shortages getting eased, raw material prices have started coming down, and there is a huge waiting period because of new launches. So they should do well. And it does give us an indication that numbers for the September should be extremely good as compared to September 2021. Why? Because the GST collection continues to remain extremely good. And if that is so, it should reflect in the September. So overall, we do believe that September numbers for India Inc. would be extremely good. I would not be surprised if we see at least 18 to 20% top line growth for India Inc. for September numbers. 18 to 20% growth. This is on versus September 2021 numbers. With this, just a gentle reminder before we open the floor for question and answer, 19,999 for 2 years plus 6 months. This offer is only for those who are attending this webinar. It's a very limited offer. It's an Azadi offer. We will close anytime. Okay? And hence, it's in your interest that you extend as many times as possible. If you are not a member, you can become a member and start enjoying all the powerful tools, plus as and when we launch broking, zero cost, and you don't have to pay 2% fees on the model portfolio. Why? Because this 19,999 offer does include model portfolio as well as portfolio optimizer. Going forward, Bojo Professional package will not have model portfolio and portfolio optimizer. This is last chance for all of you to start availing this offer. With this, let's open the floor for question and answer. Over to Adrian. Over to you, Adrian.
Yeah. The first question is from Mr. Shashank. China has done interest rate cut recently as per Economic Times news today. It looks like it will help the metal sector as well as the consumption sector. What will be its effect on the Indian market as well as Q2 and Q3 numbers of India Inc.? Please guide.
So you are right, Shashank, in terms of your observation. Even if you look at some of the prices of zinc and copper have started inching up. I think this market was waiting for some kind of a stimulus from China, because Chinese economy has been struggling to report growth. It's too early to come to conclusion. Will this really result in more robust demand from the China because China accounts almost consume almost 50% of world ferrous or non-ferrous metal. So I think we need to wait and watch. So it's a little too early to come to any meaningful conclusion because metal prices have been very, very volatile. Will this help India Inc. in terms of consumption cycle? I'm not so very sure, sir. I think they are too unrelated in terms of the impact. So it's too early to come to any meaningful conclusion. I think we need to wait and watch. Not necessarily that lower interest rates should spur the growth and so on and so forth. There are some structural changes that China needs to do because their real estate sector is completely under a lot of pressure. And if they don't able to handle that, the lowering of interest rate may be a solution, but is it a solution that could revive the economy? looks a little difficult. So we will wait and watch. I don't think we can right now in a very strong position to come to any meaningful conclusion. We will need to wait and watch. I do believe that my personal opinion, Chinese economy may continue to struggle despite this rate cut.
The next question is from Miss Meena Pasi. I read in Money Control that after the merger of HDFC and HDFC Bank, both these scripts will be moved out of Sensex or Nifty index and their weightage will be distributed in other scripts. Is this true? Can you please throw some thoughts on this?
No. So what can happen when there is a HDFC and HDFC Bank merger? There could be some period of time they could be delisted because to complete the merger process. But I don't know that will happen or not. But they will always be part of Sensex and Nifty. So they could be temporary, they may be moved out and then again brought back. But they will not be permanently out of HDFC and HDFC Bank as out of Sensex because that will become the merged entity. HDFC Bank will remain entity. I doubt that. No, that will not going to happen. I doubt. I am very sure that HDFC Bank will remain part of Sensex and Nifty as this one. So there is nothing to worry as such. I don't know which article you read about it, but I think your understanding or your reading about that, your understanding is wrong, or the person who wrote this may have a different understanding of this. HDFC cannot be out of Sensex or Nifty.
The next question is from Mr. Mayur Sharma. Hi, I am 37 years old. I have a high risk appetite. I don't have any liability and can hold for 5 to 10 years. Should I start investing in model portfolio aggressive or should I buy the top 10 Mojo stocks?
Mayur, I would suggest you please invest in Mojo portfolio approach. Why? Because top 10 Mojo stock could be from one particular sector or higher lineage from one particular sector or particular market cap. Am I right? And that's not the way you should play. You should always take a portfolio approach. Why? Because portfolio approach will be a mix of right market cap allocation, right sector allocation, and single stock exposure. So my request to you, given a choice between, and not only to you, Mayur, I think this is a message to everyone. Always take portfolio route. Single stock or a basket of stock sometimes can create confusion and can sometimes create undesired result. The moment you take portfolio approach, your probability of making money goes up. So my request, please go ahead with the model portfolio aggressive and create wealth from the equity market.
The next question is from Mr. Farhan. When can we expect to have a Sharia compliant model portfolio? I have raised this issue that I cannot invest in model portfolio usually because at least 30 to 40% of the stocks are non-compliant. I would appreciate if you can update us on the same.
So I think I did respond to your email, Farhan. I think you must have received a reply, but nonetheless, for the benefit of you and everyone, let me repeat that right now we don't have any product for Sharia compliant, and when it will come, I don't have any visibility also, to be very frank with you. So we don't know. So what I would suggest you is that in our Mojo Infinity, we do have, Farhan, the option of rejecting the stock. You can put those companies in a negative list which are not Sharia compliant in case if we are asking you to buy. And hence we will replace you that company with some other company. But that is not possible in model portfolio. So either you can ignore those companies from model portfolio, you don't invest in those companies and continue with the balance the stock that we are recommending in model portfolio, but that's not the right way to be verified. Why? Because your weightage would undergo tremendous change because you're not investing on that balance 30-40% of the company. But that's the only solution I can think of. Or my suggestion is to come to Mojo Infinity platform, and there you would be able to follow the Sharia compliant portfolio. And right now we don't have anything for model portfolio.
The next question is from Mr. Mohana Kumaran. If my Markets Mojo subscription ends on 31st December 2032, will I be ineligible for Infinity from 1st January 2023 because the residual period is less than 10 years?
No. You would be eligible for, so if you are a member, sir, right now, so you will continue to enjoy it. So once you come to the Mojo Infinity family member, family, then the 10 years period doesn't apply. Then you will continue to enjoy the benefit of Mojo Infinity. You don't have to worry about 10 years membership. But it's in your interest that you should extend as many times as possible. Why? Because right now the offer that we are giving you, 19,999 for 30 months, does include model portal portfolio optimizer, which will go away once your membership expires of Mojo Professional.
The next question is from someone who was not ready to mention his name.
Yeah.
I brought 400 Tata LXC at about rupees 665 about 5 years back. I plan to sell 40 shares now at 10,500 odd and use this rupees 4 lakh to invest in Scaffler. Do you think this is a good way to grow my portfolio?
Yeah, there is nothing wrong with this portfolio. First, I must congratulate you, sir, that I hope you are sir because you will not disclose your name. But a brilliant call of getting into Tata LXC 5 years back at 665, and you have really created good wealth. Now the job is for you to create the sustain that wealth, because I've seen many investors really made a very good killing by investing in March 2020, and all the gain evaporated because the call that they took post that were not so great, and whatever the money that they made is all gone. So you have done a good job, sir. Idea is to preserve that wealth that you have created and also multiply that wealth. So I think what he is suggesting is that getting out of Tata LX and going into Scaffler is a good move. Remember that Scaffler is also a stock of the month, and we do believe that the Scaffler India should do extremely well. We also do believe that capital goods segment should also do going forward very well. Why? Because of softer commodity prices, rate of interest seems to have almost reached the peak, and hence that will give a lot of visibility. And if you look at the RBI capacity utilization data, which says that capacity utilization has now above the average of last 5 years, which in other words, there would be need for India Inc. to do capex, and that should really benefit the capital goods segment. So I think it's going to do extremely well. So go ahead, sir, and invest that.
Sunil, the next question is from Mr. Tushar. Is it a good time to buy Vedanta Limited because it has been fallen from around 400 to something around 250?
Sir, Tushar, we don't believe in catching falling knife. So right now, Vedanta is not a buy in our system. And see, you remember that this is a commodity stock. It is going to remain little volatility depending upon what is happening in China and globally. If the world economy is going to remain little soft in terms of economic growth, Vedanta being a part of heavily dependent on the global growth, the commodity business that they are into, I think they may continue to report not so robust numbers, and if that's so, market is not going to like it. So, reason for you to buy into a company because the script has corrected is a wrong way to look at it. There are many investors. I'll give you, of course, I've given this example many times, but just for your benefit, I will again repeat. A friend of mine from Kerala, he invested in DHFL in September 2018. Yeah, 2018 only. And almost 4 years back. And one day, if you remember, DHFL cracked by 50%, 50. 50% single day crack. And this guy, he bought one day before the crack, and he bought more amount of the DHFL the next day when it fell by 50%. And he got really excited. So if he has invested 100 rupees, on previous day he invested 200 rupees because he was available 50% discount. And I told him, you made a very wrong choice. Why? Because his reason was only that price has fallen, but he did not figure it out why the price has fallen. So sir, in the case of Vedanta also, you need to understand, is the fundamental in tech, and it's only because of poor sentiment the price has come down to 400 to 250, then yes, what you are doing is the right thing. But if there's a genuine reason why this clip has fallen from 400 to 250, then you should really go look at it and say, what is the probability of this company further going down? That's a question that should come to your mind. So not only to Tushar but everyone here, for your reason to buy that company should never be the case कि उसका price गिरा है. You should evaluate कि why the price has fallen and has any change in the fundamental story of the company or not. If the fundamental story has undergone change, there is no reason why you should go, because you will be catching a falling knife, which in other words you are going to hurt very badly to your portfolio. So reason to buy a company because the price is corrected is not a right way to look at this. If you do that, I can rest assured you, your portfolio will always underperform.
The next question is from Mr. Prashant. You recommended stocks from the FMCG sector which performed well, like ITC. So can you recommend any other stock like that?
So Prashant, we do have Varun Beverages, which is also a stock of the month, almost gone up by 100% or so since it's becoming a mojo stock, and after becoming a stock of the month is up by 70% or so. So my suggestion would be that Varun continues to remain good. ITC is one company that we continue to remain bullish on that, and just follow mojo stock, mojo score from the FMCG space to decide which company to go in. So this is the way you should do it, Prashant.
The next question is from Mr. Arjun. So the FII have started coming back to the Indian equity market. So will they increase their holdings going forward?
Arjun, absolutely right. They will. If you remember, we did predict that FII will come back very strongly in the second half. We did mention that FII would be net positive in the month of July or August. Am I right? And they did. And we also predict that for 2022, FII will be net positive in equity market. In other words, whatever they've sold in the first half of 2022, they will buy more than that in the second half. So I agree with you, sir. They will come back very strongly. They are coming back very strongly, and they will keep pumping money. In fact, there is one article today Mint has done on the cover on the front page. And I request everyone to read that article. What that article says, I'll just, I've taken the photos of that. Now, what this article says is that how India has performed vis-a-vis other emerging markets of the emerging market index, MSCI emerging market index. And they did the study from 1st January 2021. While MSCI India index is gained by 18.5%, MSCI emerging market has lost 21%. Are you getting my point? India is a part of emerging market. So while emerging market index has got down by 21%, during the same period, MSCI India index is up by 18%. Why this data is very important? See, FI is also fund manager, and fund manager job is to allocate money where it's going to do well. So if Indian market is going to do well, FI has no other choice but to come to Indian equity market and put it. And hence, I strongly believe FII will come back and is coming back very strongly. They are not going to stop by putting few thousand rupees now. They will go and put couple of lakhs in Indian equity market in next 12 months or so.
The next question is from Mr. David. While global markets expect inflation to subside in the coming months, what will happen if that doesn't happen?
David, we don't believe that inflation will subside in the coming months for the global market. If you happen to listen to my webinar, which I did on last Friday, I did mention that developed market will continue to face a lot of challenges in terms of inflation. Why? Because the energy prices are going up significantly. And that could create, and second thing, the China plus one policy, no other country can have the same economies of scale that China had, am I right? So they will continue to face inflation for some more time. As far as India is concerned, I do believe that India's inflation in India will keep going down. So trajectory for Indian inflation would be much better as compared to developed market. And hence, I do believe that India would do extremely well as compared to developed market. So I don't subscribe to some of the experts believe that global inflation will start subsiding in a couple of months. I don't think so.
The next question is from Ms. Sheetal. Any plans for the derivative market?
Not really, to be very frank with you, Seetal. I think I don't invest in derivative market. I don't understand also. So no plan. But having said that, there is nothing permanent in at Markets Mojo. If it's seeing that there is a more demand from investors like you, we may consider even the derivative market. But right now, we don't have anything on pipeline, which I can say firmly yes. As the time progresses, we may think of it.
The next question is from Mr. Avijit. Namaskar Sunil ji. I am yet to use the add cash option for the personal portfolio. Please clarify how it works, and will monitor the recommendation and advise sell or profit booking call as well, just like model portfolio? If yes, then it's great. If no, then please tell me how to go about it.
Avijit, I think this is you are putting a personal portfolio. Personal portfolio, sir, I don't think we have an add cash option. Am I right? But in case if it is there, I'm doubt it's there. But we don't monitor personal portfolio, sir. We need to just look at our score and decide. In model portfolio and Mojo Infinity, we do monitor portfolio. We do tell you when to exit from the particular company. In personal portfolio, we don't. So, okay, so your question is if no, then please tell me how to go about it. So either create model portfolio or come to Mojo Infinity. That's the best way you can do that. And we will tell you when to exit and how much to allocate to each and every company.
The next question is from Dr. Shivam. Hello, sir. Please advise what would be the brokerage charge for NRIs. Will it be free? I missed the webinar. One of my patients told me about the same. Can you please share me the details?
So, Dr. Shivam, I'm not very sure whether it will be free or not for the NRI. What I know is basically definitely for the resident, it's free of cost. It would be only for those who are Mojo professional member, and only till such time the Mojo professional subscription is there. Okay. For NRI, even I don't know will it be there, what rate it would be there or not. I don't have any clarity, to be very frank. I don't want to give you wrong information. Let me speak internally. Let me speak to my compliance also how it would work for NRI. But right now for resident Indian, it would be free.
The next question is from Mr. Shantanu. Sunil ji, I had brought Deepak fertilizer in my personal portfolio and it has gas run up by 35% approximately. But since it is a yellow quality stock, I always face the dilemma whether to book profit or hold. Can you give a general guideline on how to deal with these kind of stocks which are buy rated but yellow quality?
So, if it is a buy, you can continue to hold. There is nothing wrong with that because we do own average quality, that is yellow quality stock in our Mojo Infinity also. So, as long as it is buy, Deepak is a buy in our system with the score of 75, you continue to hold. The moment it becomes a hold, and if the script is falling, then you should basically get out. So just a simple formula, Santanu. If the score is closer to 60 and if the script is falling, you please make an exit. If the score is closer to 60 and it's moving up, you continue to hold that company.
The next question, Sunil, is from Mr. Harshit. I already have a subscription till 2047 and I'm a senior citizen as well. Okay. Can I buy the subscription for my kids?
Of course, you can buy subscription for your kids, Harshit, and you can in fact gift it also to your kids actually. And it's a good to have inculcate the habit in the children for the financial planning and the equity investment. So, sir, you are senior citizen. You are subscribed till 2047, so that's next 25 years. Well, you can definitely buy a subscription for your kids. Do let us know which email ID you would like to attribute this subscription, and we'll pass on that email ID, the subscription to that particular ID, so that your kids can also enjoy the benefit of wealth through equity.
The next question is from Mr. Pankaj. Hi Sunil, by when can we expect the small case integration with model portfolio? I plan to start a new model portfolio and I'm waiting for the integration.
So Pankaj, once we move to the Mojo Infinity platform, as we told, model portfolio is going to the Mojo Infinity portfolio, there the integration would be allowed. The only thing you need to do the KYC. So if you are not a KYC compliant, then you need to complete the KYC, then a model portfolio would also be available with the small case.
The next question is from Mr. Neeraj Kumar. Good evening, Sunil. I follow my investments made through Infinity Soul and Power, model portfolio, trading 80, stock trades, and my personal portfolio on my MacBook. I open model portfolio of a few lakhs in Safari and trading 80 on Chrome for quick check, plus Infinity portfolio of around 1.10 lakh.
See,
on
what
my
you should
phone.
do, again, don't disclose the value because
Okay.
it would be not be appropriate on a public forum to disclose someone's portfolio value. Yeah.
Okay, so his basic question is that he's getting restricted for multiple device. So is there any update on that same?
So I think we have now removed certain restrictions, and we do get a lot of complaint from all of you. So I think we have made some adjustment. I hope that you are not facing a problem. I think we do allow up to 5 what we call browser or the machines where you can access your Mojo Professional. So I think, sir, this was a problem. I agree with you. But this problem has been taken care because see at Market Mojo we do listen to our customers, and if it's a genuine problem we try to address as fast as possible. So we have addressed this problem. So sir, you now try. If you still face a problem, do write to us because we have changed this restriction and we've increased the number of people who can use simultaneously to 5 as we speak.
The next question is from Mr. Satya. Sir, your view on Index Nifty and Bank Nifty, since both are rising continuously in comparison to stocks.
So I do believe that the Nifty should do well because I'm extremely bullish on the Indian equity market. And if you remember, I did mention that by October 2022, the sentiments of the market would be much improved as compared to what it is right now. As far as Bank Nifty is concerned, I do believe that it should underperform. That's what my personal opinion. And if you look at our Mojo stock also, we don't have many bank stocks as a part of the model portfolio, part of the Mojo stock also. So that gives an idea that our IP also suggests that logically Bank Nifty should underperform.
The next question is from Ms. Priyanka Rao. Dear Sunil, I have a basic difficulty. Suppose I have created a model portfolio and my subscription comes to an end. Under this circumstance, will you still be looking after my model portfolio, like advising me to buy or sell the stock?
Suppose I create one for my personal comes to an end. Sir, if Priyanka, if your subscription comes to an end, then we will stop monitoring your portfolio. We will not be advising on your model portfolio what to buy, what to sell, and if you sell, what next you should be buying. So your service of model portfolio will continue as long as you have a Mojo Professional subscription. Once you are no longer a Mojo Professional member, then we will not be able to offer any advice on model portfolio. No, it will not be possible also.
The next question is from Mr. Das. What sector related trend you can see after almost completion of June quarter result?
So one trend is very clear cut that the SEBET will continue to underperform, FFG will continue to underperform, non-ferrous metal company will continue to underperform, will not come out with a good set of numbers. Steel will have a not so great numbers. Consumer durable company will not have a so great numbers. Real estate may take some beating because of the layoffs and the rising interest rate, which doesn't augur well for. But auto should do well. That's what our sense is. Auto ancillary should do well. That's what the trend we are getting it. Company from paper sector should do well. That's what the trend we are getting. And I think capital goods as a segment should do well because of robust demand from the automobile industries, and some of the capex cycle that has started doing well should also help them to do that. So these are the sector that trend that we are getting based on June quarter 2 numbers.
Sunil, there's a very common question today. I'll be picking up a question from Mr. Shenoy. Hi Sunil sir, can you please share your view on Voltamp transformer? I'm holding it in my model portfolio and it has fallen substantially after the company declared its results. Any reason?
Okay. So let me tell you that we continue to hold Voltamp transformer. Yes, yesterday it did move down very substantially because market did not like the numbers. and the numbers came out on the Friday, and on Monday Tuesday they had to react to it because Monday was a bank holiday because of 15th August. Yes, the script did take a beating. Today it is, I think, almost at the same price. That's what my sense is. We continue to remain invested in volatile transfer. We have not changed our view. In case if you are holding this company in a model portfolio, since you are holding in a model portfolio, we will tell you exit at the appropriate time. Right now, it continues to remain a buy in our system.
The next question is from Mr. Rajan. Post shifting all Infinity customers to the PMS scheme, no sooner PMS approval is received by Mojo from SEBI, whether the fee of 2% being charged under Infinity to us right now will continue post migration to PMS also, or it isn't otherwise. Please clarify on that.
So, Rajan, if I have understood your question, once we start our PMS and you opt for PMS, we will charge you, right now we are charging you 1% fee every 6 months, and that 1% fee that we are charging you only and only if your portfolio is in profit, am I right, as compared to the previous 6 months. That is again after paying, considering the fees that you have paid us. And most probably that same will continue once we move to the PMS. But as the time progresses, we may come out with different kind of a rate and structure. But as long as the 1% fees is concerned, I think that will continue even in the PMS. So there is no change from going from what you are buying and selling on your own to moving to PMS. The only thing, the fee structure will remain the same. Only thing that will change is that instead of you buying and selling, we will buy and sell for you, so that it helps us to improve the impact cost on overall portfolio. So that's the only change that will happen. Otherwise, you will continue to receive the same service and the same quality and the same portfolio construct when we move to the PMS license.
The next question is from Mr. Shubham. Is intraday a platform for loss, and will you suggest for doing intraday?
Shubham, my personal opinion, I'm not a very big fan of intraday, and 99% of the investors, if not 99, maybe 95% of the traders lose money by doing intraday. Now, if you think whether you belong to that 1% or 4%, 5% of that which make money, please go ahead and do that. I wouldn't recommend intraday. So, but intraday also gives you a lot of people kick, am I right? Like Rakesh Junjunwala, he has gone on the record saying that, unfortunately we lost him, but he said that the intraday gives him more kicks, that speculation gives him more kicks than investing, you know. So my point is that you start intraday with a very small amount. Just see whether you are getting success or not. If you are getting a success, increase the amount. Then again try it out. If it further gives you more success, then further increase. But at no point of time, you should increase 15% of your total net worth of the equity market to intraday trading. 15%. आप कितना भी successful हो जाओ, 15% पे limit कर देगा. That's it. Why? Because intraday is a speculation. Sometimes you will make money, but when you lose money, you will lose money big time. And the greed takes over and the overconfidence takes over when you do intraday. And you tend to take a big call at the wrong time. And so that's what my advice would be, Subham.
The next question is from Mr. Mirza. Is investing in small cap more profitable than large cap companies? Your views on it?
Depending upon, sir, which company you invest in, sir. See, we have seen some of the large cap also giving excellent returns. And at the same time, we have seen some of the small cap also giving very bad returns. The challenge in the small cap is to find out which company will do well. So going by the same name, we are invested in Mirza International, to be okay. Sorry, it's your namesake only, and that company did extremely well. In fact, many of our Infinity Soul and Power portfolio do have them, and we did advise book profit in Mirza International to our investors. So in a small cap, your stock selection amounts it's a very critical. So in large cap also it's very critical, but it's not as critical as what there in the small cap. Am I right? So in small cap, if you to really create wealth, you have to be very, very sharp and very confident of what company you are getting into. And that's where what I've observed with the retail investors, sometimes they are not so well researched to identify the right small cap company. And hence, you need a platform like Markets Mojo to invest in a right small cap company to create wealth. We have seen some of our Mojo stock which started as a small cap and graduated to the mid cap. So my suggestion would be, yes, small cap do make money provided you is been backed by proper research from a proper platform like Markets Mojo. If you are trying to do on your own, probability is very high that you may lose money in a small cap.
The next question is from Mr. Shekhar. Despite in the recent recovery in the market, there are 2 to 3 Mojo stocks which are still in red. So do you think it's the right time to invest in these stocks?
Yes, I must tell you that at any point of time, we would have 1 or 2 companies in the red. It's a practical not possible that each and every Mojo stock would always be in a green. I think it has happened only once or twice. Okay, but normally urega ek do because see, remember, we need to also remember that even if the Sensex touch all-time high, not all companies touch all-time high. Am I right? There would be some companies which would have touched 52-week low also. So hoga. Now your question is, do you think it's time to invest? As long as they are Mojo stock, you should definitely invest in those companies, because the reason they remain as a part of Mojo stock is the fact is that our system do believe that this company can outperform. That's why they are part of a Mojo stock list.
The next question is from Mr. Dhruv. What is your outlook on the steel industry? Will the export duty be revoked? Or if it is not, then what is your outlook on that?
Dhruv, it's very difficult to read the mind of the government. Okay, but if you happen to listen to JSW Steel, happen to listen to Tata Steel commentary, they do suggest that demand outlook will remain little slow, because the profitability will remain little low because of this export duty. If it gets revoked, it's good for the steel sector, and it will get revoked eventually. Now, it's very difficult to say whether it get revoked in the month of August or whether it get revoked in the month of September, October, November, December. It's very difficult to say. So right now, what we get a sense, Dhruv, is that September numbers for the steel companies will look little challenging. They will not be so good. And post that, we need to again revisit. But remember also, steel is a global commodity. And what happens globally also is a factor that could decide what kind of revenue Indian steel companies can make it.
Sunil, we are done with the Q&A.
So thanks again. I think you today extended our question, so you could cover a lot of ground. So thanks for that. Once again, gentle reminder that we have a very few last moments to subscribe to Mojo Professionals package, which includes model portfolio as well as portfolio optimizer for 19,999 for 30 months. 30 months. Okay, this is the last chance for you. And if you subscribe Mojo Professional member, if you remember, when we launch broking services, you will get 0 broking. And also, Mojo Professional service do includes 5 model portfolio: aggressive, moderate, and conservative. It's good combination of everything without paying additional fees for that. So I'll request my colleague Adrian to please drop the link so that you can avail this offer. Thanks a lot, Adrian, for hosting this webinar. Over to you.
Thank you everyone for attending this event. We have a rapid fire Q&A event at 7 p.m. tomorrow with Mohit and Sunil, where you can ask all your doubts on stock, sector, market related, or doubts on your investment strategy. Please do attend the upcoming webinar as well. Thank you and goodbye.